So we move to chapter 4, labour. An important chapter for us and certainly very, very examinable. The examiner likes this area. Let's be clear here in section 1 on the distinction between direct labour and indirect labour. In terms of definitions, we see very clearly direct labour, work is directly attributable to producing a product or a service. We can attach this labour very, very easily, quickly, and simply to this particular product or that particular service. Now, in terms of indirect labour, as you would expect, it's not directly, easily, or simply attached to the production of a product or service. Does that mean that it won't necessarily affect the cost of the product or service? Well, it may do in the form of some sort of attributable element. Now, moving to the next area, let's look at recording labour and indeed the labour account. Now, there's a lot of detail here that doesn't tend to get examined, this particular area. So, when we think about the recording of labour, clearly what we're talking about is time. So, reasons for recording labour time spent, as we can see here, is that employees will generally be paid for the hours, for example, that they have spent or worked. In addition to that, perhaps time can be charged to a specific job or indeed a client. Now, some examples of that, let's say in terms of employees, you may be familiar with, say, timesheets, commonly used, for example, solicitors and accountants, recording the number of hours, in fact, more likely minutes, and allocating that to the particular client. Outside of that, possibly job sheets, often known as task-related timesheets, and used to list time on a particular job, let's say by several employees. So really what we're looking to do is account for the total time across the board in relation to the particular job. Now, in terms of recording labour costs and account, this area for me is very, very detailed for MA. What I mean by that is that there's a reference to double entry or debit and credits and indeed T accounts. And I think the most important area for us really is to get an overview. We know that businesses incur costs on labour, salaries and wages. And we know that there are deductions invariably from gross salaries, for example, in the form of social security or national insurance in the UK. So really, wages control is made up of a number of elements. The net pay is paid to individual employees, and obviously any taxes or PAYE, social security contributions or national insurance are paid over periodically to government bodies, tax jurisdictions. Now, the paying of the wages, the simplest entry here. In terms of double entry, let me explain very briefly. A wages control account is really a job lot account. In other words, an account where we bring in a variety of labour associated costs. We're looking within the wages control account to control all wages. And this first entry is very simply the payment of the net wages to staff. So we're debiting the control account and crediting bank or cash, which is an asset. So we're really reducing, in effect, the asset of cash by crediting it and increasing what you might call a sort of a control expense account, i.e. the expense associated with wages. Now, there's a lot of detail in the chapter about accounting for these areas. For me, if you look at past examination questions for MA, they're not regularly examined. I draw you to them, but for me the MA exam is not really focused, unlike perhaps FA, on a real deep knowledge of accounting. What I would draw your attention to, though, is this final area, the wages control account that I mentioned up top. And what you'll see here is that all of the entries relating to wages and the associated entries are all shown within this account. So as I've mentioned up top, the wages control account really houses not just perhaps work in progress, some element of indirect labor costs, etc. And indeed on the left-hand side, the various deductions in terms of what's been paid out in net wages, which was Journal 1, and indeed what's to be paid or paid out to the tax authorities. So really here we see the bank entries, and here we see what's due and indeed the statement of profit and loss account entry. So in essence, once we control the account, the wages control account, this is the entry that will be taken to the profit and loss account as the total wages charge, but it will be controlled in this account. In other words, balance, because the two sides should balance, with this element being the total. So moving from there, when we think about remuneration for labor, obviously a variety of different choices, and certainly over the last 20 to 30 years, remuneration packages have changed. If we look at time-based systems, let me just make this a little bit easier for you to read. If we look at time-based systems, then clearly, obviously, things like, salary and indeed wages are areas that we're familiar with. Salaried employees will be paid more likely a given agreed amount per month. Wages, slightly different. Waged employees possibly paid at some sort of agreed hourly rate, depending upon the hours that they work. So note the difference between sort of monthly salaried employed and wages generally paid by the hour. Outside of that, you're familiar, I'm sure, and I hope that you do get overtime premiums for work done to persuade workers to work outside normal hours, normally in addition to standard pay. Now, in terms of sort of simplicity, certainly, time-based systems, pretty simple, simply based on hours, more likely times a rate, whether or not it's a monthly rate or an hourly rate. Outside of that, probably fair because everyone is paid in the same way. There is a standard rate or a standard hourly rate, and that is what you get. What about disadvantages? Well, with standard rates, whether they're salary or wages, or let's say even a overtime rate, there's really no incentive because everyone gets the same. There's no incentive to differentiate yourself from the next person. Outside of that, in effect, everyone is basically paid the same. So some advantages and indeed some disadvantages. What about piecework? Does that solve the system? Well, first off, what do we mean by piecework? Well, two different types of piecework. Firstly, straight piecework. So really what we're talking about there is just a set amount for each unit. Okay, so you produce 10 units, you get an amount, a rate in effect associated with that unit. What about differential piecework? Okay, well, employees are paid different rates per unit depending upon how many units they have produced. So in effect, they may be rewarded for higher rates as the production level increases above agreed targets. So if you will, there's an element of incentive there, okay? Moving from there, in terms of incentive-based systems, you may be familiar with these. Obviously, incentivizing employees to work harder is certainly something that employers want to do. So this is all about, I guess, paying a bonus linked into some sort of target. It could be down to the individual themselves or possibly a group. So a simple example of an incentive scheme would be commission, possibly commission-based sales. In terms of advantage here, clearly efficiency is being rewarded. And then outside of that, you may well find that because there's a bonus, because there's an easy way to make more money, more skilled people will be attracted to being paid in this way. Okay? In terms of disadvantages, clearly, it's a more complex system. So more administration for sure, and also a requirement to control quality. Because in effect, if you're paying more for, let's say, more production or for agreeing against targets, you have to ensure that the output that the employee is producing is in line with a quality standard. Now, in terms of labor, turnover is an important area. I'll explain what that means in a moment, but we've seen on the other side, we've talked about different types of labor, indirect, direct. We've talked about possible ways to pay, maybe time, maybe piecework, incentive-based, etc. But what about downsides, i.e. turnover? The rate at which employees leave an organization. Any organization wants to keep employees, particularly good employees. What would be main reasons? Well, a multitude. Depends on the circumstances. Maybe higher salary elsewhere. Maybe the work environment. Maybe the social environment isn't quite what they want, or maybe they've been there too long looking for a new challenge, or there's a ceiling to their sort of advancement. So a variety of different possible reasons for employees leaving employers. Now, in terms of the costs, there are some serious costs. Let's talk about preventative first. Okay, so how do you prevent high turnover rates? How do you prevent employees from leaving your employment? Well, preventative costs would certainly figure on, benefits and incentive schemes. Outside of that, certainly, the costs of training. You're trying to create an environment and packages and income to stop people, to prevent people leaving or considering leaving. What about the flip side? Well, the flip side is they've left. We have to replace them. When we think about it, replacing staff is perhaps one of the most costly things, particularly if they're good staff. We lose skill, we lose output from employees who may have been there for a very, very long time. We've got the cost of recruitment, advertising, agency fees, etc. And we've also got new costs of training and possibly involving existing staff in applying instruction in some way, shape or form. So there's several costs associated with losing staff or even having a high labor turnover. Now, how do we calculate this rate? Now, this is important and will be examined. The labor turnover rate is basically replacements divided by the average number of employees. Now, average, normally we mean simply from point one, i.e. start, to end point. It might be January 1st through to the end of the year. Okay? Let's be familiar with this formula. It's going to come up in your exam for sure. Outside of that, some labor ratios, and this really centers on sort of efficiency in the main. So when we think firstly about an efficiency ratio, we're talking about the idea of the expected hours to make actual output divided by the actual hours taken. Okay, pretty simple. We expect to make X in a certain number of hours, but we took this long. Capacity, very, very similar. As we've said, we're looking about the capacity of the business, or the capacity of the department. So actual hours versus hours budget. This is what we thought our capacity was. This is what we've actually worked. Next one, production volume. When we think about production volume, we look at really the expected hours. Let me just move this across for you. The expected hours to make actual output divided by the hours budgeted, the production volume ratio. And then indeed the last one, the relationship between labor ratios And this is important. Again, we need to memorize this. If we multiply the two, and you'd have to really do this with numbers, so I would encourage you to make sure that we've done the activities in the chapter, but also watch for these questions in the OT question set of the course. Efficiency ratio times capacity equals production runway. Simple mathematics will show you that that holds true. Okay? So, in terms of labor, we've covered a number of different areas here. I think the key points are really, for me in this particular chapter, an understanding of the formulas and indeed the ratios and practice. You know, in terms of high-level technical difficulty, I don't think there's a lot within this chapter, but certainly we can expect questions using those formulas and also using the manipulation of those formulas. Okay? So I hope that made sense. Let's get into the OT questions as quick as we can. Thanks for listening.